Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, as I said, we're going to be talking taxes today, and joining me here is my good friend, special guest, Dr. Friday with Dr. Friday's tax and financial firm over in Brentwood, Tennessee. She is a tax expert for individuals and small business owners. And this is one of those areas, Friday, when we're talking about taxes, of course, and preparing now for the tax season, which is soon upon us. Getting those those tax forms, getting everything organized and together, making sure that things are done correctly. One of the things that comes with that is an opportune time. One of the things I know for us, we set aside, we have a number of joint clients and mutual clients, if you will, and we set aside, I think it's about 4 or 5 days each year just for my clients, because that way we can get them, you know, we might meet with 10, 12, 14 people in a day doing their taxes. And in that manner, I'm able to be there. We can set aside that day so I can be at each of those meetings. Logistically, it works out really well, and it gives us an opportunity to do a review, a small review at the same time, in particular with regard to not just making sure their taxes get done correctly this year, but also maybe it's an opportunity for a little tax planning as we see the impact of taxes this year and start thinking now of 2021's taxes. So
exactly. It's so nice to have that kind of setup, to be honest with you, because we've ran into a lot of people get forms, but they don't look at them, Hank. They just assume that whoever sent them that form, it's correct. And we have had a lot of times where stocks didn't have basis. 1099-Rs were marked incorrectly. People did rollovers, but showing it as taxable, etc. And if we can fix those mistakes before the IRS gets those documents, it is so much easier on the clients.
Absolutely. And this is, you know, some of that comes into when we talk about planning. So let's say we may be doing a Roth conversion strategy to basically minimize taxes over the long haul. What we're thinking in terms of, and by the way, this is one of those areas with regard to taxes. Do you think your taxes are going to go up? Right? In particular, when they pretty much have told you, the new administration has pretty much said we're raising taxes. Now, those is the comment has been two things, and this is that do not jive, by the way. One being we're only going to raise taxes on people making $400,000. Second thing, though, we are going to repeal, if you will, do away with the Tax Cuts and Jobs Act under the Trump administration. So those two things don't work, because what we saw with that act, that Tax Cuts and Jobs Act, is that everybody's taxes came down. We went from a 15% bracket, for instance, to 12%. All right, we went from a 25% to 22%. So these were at all levels, basically, other than those making, that just in a 10% bracket, or those that don't pay taxes, of course, everybody's taxes went down. So if they do away with that act, then the opposite is going to be true. Everybody's taxes are going to go up. Now, there's some other things you have to consider as well, which are, how are they going to pay for all this stimulus? At some point, right, we've got to pay all this money that we're in essence borrowing, has to be paid back. All this debt has to be paid down. And this is one of those, there was an article recently here, of all things. Now, this is, and just to make this clear as well, this was from an Israeli newspaper, the Times of Israel. This isn't just a United States problem. This is a worldwide problem. This stimulus thing has been going, this is around the world. Everybody's been impacted. All countries have had to do things. All the central banks have acted in similar ways. Negative interest rates, high borrowing, increasing debt. So this isn't something you can, and from an investing standpoint, this is why you can't just go overseas, for instance, and say, oh, well, if it's all bad here, I'll just go over there. No, it's bad everywhere. So this is another reason that you have to be more careful with regard to your investing. But then comes the tax planning. So, as we say, Dr. Friday, your expectation as well, I would assume, is that taxes are going to go up in the future rather than down. And that means strategies like Roth conversions are going to be more and more important.
Absolutely, absolutely, because with the lower tax rates that we have right now, many people were maybe putting money into Roths or whatever because it wasn't being cost efficient. But as the tax rates go back up, and there's no question that tax rates are going back up, that's the only way they can raise money, and inflation's going to hit. Between the two ways, we have to actually start preparing now for what's the best ways to protect ourselves against those particular soon to come entities, you know?
Yeah. All right. So here we've got a caller. So I'm going to jump on here and invite Linda to join us. Hi, Linda. How are you doing this morning?
Good morning. Dr. Friday, I have a few questions to ask. My mother passed away in July of 20, and Dad received her stimulus, but does Dad get stimulus for her, the 600 stimulus, and for her and him?
Yes, because she was alive in 20, so yes, she should qualify for both all stimulus so far.
Put that on the tax
2020
form?
Return. Yes, ma'am. On the 2020 tax form.
Can you hear her?
Yes.
I can't hear Dr. Friday.
She said, okay, go ahead, Dr. Friday. If I have to, I'll go ahead.
Yeah. I just said yes, she will have, there's a place on the tax return for him to claim that money.
Okay, hold on, Linda, and I'll let Fred finish, and then I'll repeat it. So basically, yes, your dad can keep both because your mom passed in 2020, and there is a place on the 1040 form where you would put that.
Okay, that's line 30. And is there a space in there to indicate that Mother died during the year?
Not on that particular form, but on the 1040 itself, there is a place.
So on the 1040, there's a place where you would put that. Basically, that's showing it's a final return for her, and they retiring her Social Security number. And if so it is on the form.
Okay.
And if you need some help with that, we can get you. You can call Dr. Friday directly with some help there. We'll get her information up there for you.
Okay.
Right.
Yeah, I can hear her on the TV, but I can't hear her on the phone.
Yeah. Okay. But yeah.
Okay. Thank you.
All right, Linda. You take care.
Bye.
Bye.
Technology at its finest.
Yep. There we go. I don't know if that's disconnected. Taylor, I'll let you take it for me. I thought I did. In call, except that I don't see it. There. Got it. All right, now we got it. I don't do a lot of those. I got to be retrained here, it seems. This is one of those areas, by the way. When it comes to let me do this for Linda and for your viewers as well. If you call my office, if you wanted to schedule a time when you could actually sit down and do some tax planning, maybe talk to Dr. Friday about doing your taxes, you can do that through my office, which will get the number up again for you at 615-376-5325. You can also call Dr. Friday directly if you just had a tax question or wanted to, just as Linda did there, just a question with regard to your forms or maybe need a little help. That number is 615-367-0819. I know those aren't matching what you're seeing on the screen right now, but 615-367-0819. All right, one of the things that when it comes to taxes as well that we're going to be talking about here is that Social Security. So for those of you that have Social Security, there's a couple of articles here I'll share with you. One of them, this one, surprise, Social Security will net $650 billion. Let's think about that. $650 billion over the next decade just by taxing its beneficiaries. So if you're receiving Social Security or soon to be receiving Social Security, understanding the tax implications of everything you do could impact whether or not your benefits will be taxed as well, and up to 85% of those benefits could be in fact considered taxable income. And Dr. Friday, is that something you run into, and do you find that people seem to be surprised by that sometimes?
A lot, because there's a thing that comes out there that a lot of people say, well, after my full retirement, I don't have to worry about paying taxes. The misconception is early Social Security has nothing to do with taxes. It's having to pay back the Social Security 2-to-1 if you make over $18,500 or whatever. And they think that if they wait till after they're full on Social Security, then they don't have to pay any tax. What it is, you don't have to pay anything back. There's a misconception out there, and a lot of times, some people haven't had to file taxes, Hank, for a number of years, and then they sell something, a piece of real estate, or they get some taxable inheritance of some sort, and then they're totally surprised. on how much more money they have to pay, because now they have another almost $30,000 in some cases of taxable income on top of what they thought they were going to have.
Yeah, it's not just the capital gain they're paying tax on. Now all of a sudden that triggered up taxation of those benefits, and they get additional taxes, which is why planning before those things and being aware at least that if you do this action, this is what you're going to trigger, so that you can protect yourself and maybe look at alternatives. Installment sales, different things, 1031 exchanges. There are a lot of different ways. If it's real estate, if it's a portfolio, then we talk about ways that we might do that, splitting it over more than 1 year as well. All right, we got another caller. Let's go ahead and see. I hope I get the right line here. And it was Joyce. Good morning, Joyce. Welcome to the Retirement Report. Can you hear me? Wonder if I got the right line there. Yeah, I thought I did. That's the one. I can hear someone. Joyce, are you here? There you go.
Good morning.
Welcome to the Retirement Report. How can we help you this morning?
I watch you a lot, but I don't think I have enough money for you to help me.
Did you have a question this morning?
I do.
Okay.
The first question is, when do you not have to file taxes if you over retirement age, 66, 67?
Okay. We'll let Dr. Friday. Did you hear that one?
I did, and there's no such thing as an age for not having to file taxes. It's on income, not age.
So, Joyce, so basically, and this again, so you can hear on the TV, that's why I took the phone thing off since we're having trouble with that connection. But as Dr. Friday was just saying, it's not an age thing. It doesn't matter, you could be 100 and you're still going to be paying taxes if you have tax to pay, if you have income, if you have, so whether that's Social Security, and think of all the different types of income, Social Security, rental, maybe you got a pension, possibility of dividends and interest, capital gains on sale of real estate or stocks, any of those things, at whatever age, you're going to have to pay tax. That's the bad news. That's the bad news. The good news is that still, at least at this point, some of us may question it at times, but they do still allow us to keep more than we pay. So for most of us anyway, that's a good thing. I think there might be some exceptions to that, though, where you may pay actually over 50% in taxes. If you're a self-employed business owner, as an example, you may well know if you're in the top bracket plus your payroll taxes. Yep, and potential for excise tax and other things. Yeah, you could be over 50%. All right. Yep. One of the others is talking about taxes on Social Security benefits, as we were there. This is one of those areas when you receive your Social Security benefits. Dr. Friday, you were talking about there are two different pieces here. There's the one part which we were just talking about as far as taxation of those benefits, but another thing that you brought up was that people can sometimes be surprised is if they're taking their Social Security early, between 62 and whatever your full retirement age is, 66 to 67, depending on your date of birth. That period, if you're taking Social Security early, you could have a reduction in benefits, as Dr. Friday was talking about, if you make over a certain amount. And in that rule is approximately 18, I think this year, 18.5, something like that.
18.5, yeah.
Yeah, if you make over that, then for every $2 over, you would have your benefits reduced by $1. And we're gonna take a break. When we come back, we'll talk about that a little bit more as to what that means, and keeping in mind that not only might you get a reduction in benefits, but guess what? Yeah, the remaining benefits could still be taxable as well. So double whammy. First a break. Join us here. We'll be right back on the Retirement Report.